I'll mention West Pharmaceutical. We call it kind of the most exciting, boring company in the world. They'll make the stoppers that go in vials, the plungers that go in syringes, really basic products. And you might ask, why is that a good business? The twist in this business model is, from a regulatory standpoint, packaging is considered part of the product, part of the medicine. So if you're a Pfizer and you want to switch packaging suppliers, you have to refile for approval. So no company is going to do that. So once you're in, you're in. And it tends to be, a 50 cents to $1 US product, and you're talking about, something you're charging customers, $1,000 a dose. So in the end product, so it's a tiny piece of the overall pie. So there's very little reason to take a chance on a kind of a fly-by-night operator. So it tends to be an exceptional business. So go back to picks and shovels, a way to play the growth overall in healthcare and biotech. And then they're climbing the value chain as well. They're doing more and more things on behalf of customers. Like, they don't just sell the product, they'll sterilize it, they'll provide vision inspection, they'll laminate it. So with all that, they can take a 5-cent product, do a few services on top of that, and charge customers 75 cents. So it tends to be a very high margin business, and higher margin going forward. So you think about things like COVID vaccines and how that's all going to play out. West is going to be a major beneficiary from that. And I just think over the long run, it's one of the best picks and shovels way to play kind of where healthcare is going. I go back to the notion of moat trajectory, and it's really keeping that bar high, right? Is this company's economic moat still growing? And Amazon, Google, Facebook, great companies for sure. We've owned all of them in the product's history, but really it was in late 2017 that we began to think that these companies, the low-hanging fruits behind them. Amazon, has 50+% household penetration in the US. Google and Facebook have, the predominant share of digital advertising. And so the markets were starting to mature, and these companies were really evolving from kind of disruptive technology companies to quasi utilities. They're not going anywhere. We're still going to be using Amazon and Google probably a decade from now. But you could see that they're going to become more regulated. And for us, when we think about technology names, a large part of the investment thesis is we need these companies to deliver upside, right? And so we try to look for earlier stage to the extent possible names in that growth bucket. So we ended up making a series of trades where we sold Amazon, sold Facebook, and bought companies like Shopify and Mercado Libre, which in our view are the next next Amazons of the world, next Googles of the world. So it's really just keeping that bar high, trying to find companies earlier in their life cycle, and then just viewing those companies as great companies. But I think it's hard to argue they're becoming better, at least at the pace they had been.